Hi, this is Hutch with bankingtruths.com, and I'll bet a lot of you are wondering, in today's rising interest rate environment, does it still make sense to use whole life insurance as a long-term savings vehicle? This policy illustrated cash on cash to project 4.02% out into the future. Now, what it actually got was 5.76%, and it may not sound like a big difference, but that's a massive difference compounded over time. If we look from 2002 on, the dividend rate is actually lower than where it was originally illustrated the entire time. So you would expect dividends to get a lot lower. 2010, $10,700 dividend illustrated, $25,000 dividend paid. 2015, $12,000 dividends illustrated, $33,000 dividend paid. And that's because of the continuous compounding that happens in whole life.